Welcome back, everybody. Yesterday is being called Black Monday on Wall Street after a huge sell-off and a 1,000-point plunge in early trading. This morning, I'm joined by our financial professional, Scott Carty from DC Capital Management to talk about what's behind the drop-off and, more importantly, what investors should do. So I think we should start out with putting this all into perspective. Overall, our economy has been doing pretty well.
Yeah, we're actually a lot healthier than we have been in several years. We've seen a little bit of a drop-off, a little bit of a panic in the last couple of days. But if you think about how far we've come since the financial crisis began, we're actually up over 200% since then. Now, we hit an all-time high back in May, and we've had a 10% slide. But that's called a market correction. And the last market correction that we had was back in April of 2011. And our economy, like you said, is much healthier now than it was back then. Back then, we had unemployment rates of 9.1%. Today, it's dropped all the way down to 5.3%.
One of the things you say is market correction. For the layman that doesn't really understand that, what does that mean?
Well, we had a market that jumped up really high. We've gone up 200%. And then we've had a little bit of a pullback, a slide back down where we've lost a little bit of that growth.
And when it comes to investing, we're always told it's a long-term commitment, and that's what people do that have 401ks. So if you have a 401k, what's your advice for people that may not be nearing retirement and those that are?
Yeah, so 401ks right now, the last couple of days have looked a little bit scary, startling. Your account statements. But the biggest thing is not to overreact. You know, the people that are probably most concerned right now are those that are in retirement and starting to pull out of their investments. And I always try to suggest to people that we look at maybe pulling from cash or savings accounts or non-market investments.
Go ahead.
But it's always important to, when you're pulling money out or even when you're investing, to do it as part of a overall financial plan and not just to try to pull money out.
And is this a good time to buy?
Absolutely. You know, for those people that are still saving into their 401k or that have cash on the sidelines, you know, the last couple of days the market has dropped. Like I said, it's dropped 10% over the summer, so you're getting discounts right now.
And should we be concerned that it's not going to bounce back? Are all indicators suggesting that things will get better despite what happens in China?
Yeah, so nobody really knows what the market's going to do. There's ups and downs. But like I said, this is a market correction. And the average market correction typically lasts 71 days, 71 trading days, which is about 14 weeks. And I know that sounds a little bit scary.
It does kind of sound like a long time.
Yeah. But if you think, we actually hit our all-time high back in May, way back in May. So it's not like we're just starting this.
All right, sounds good. Scott, we appreciate your calming voice.
Thanks for having me on. I appreciate it.